Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So for today, we're going to go over the overall portfolio value. We're going to go over the value by the metrics as well as the buying power and why that went up. Then take a look at the individual stocks and see how they are performing, see if there are any deals. Looks like a little bit of red today. And then, of course, we're going to take a look at the watch list and see if there are any buys on that right now as well. So for today, we're down around $1,000, 1.7% loss. Then that 1 week mark, we're down $51. That 1 month mark, we're down $1,500, about 3% loss. 3 month mark, we're up almost 40 or 4,900 with a 9.8% gain. Year to date, we are up 4,900 with around a 10% gain. That 1 year mark, we're up 10,500 with a 23.75% return. And then all time, we were up $28,252.84, a 106% return. So short term, guys, anything can happen. And honestly, given that the tariffs are going live today, I am not surprised. I will not be surprised that there's red, and I'm not surprised that there's red as of right now. Buying power went up because we did get that dividend of $7 from Coca-Cola, so that is now added to the portfolio. Next up, we got realty income, first off in the portfolio, sitting at $57.32, 5 shares, $286 of market value. Average cost is $51.75. 0.5% of the portfolio is in realty income. Today, we are up 83 cents. Total, we're up $23 with a 10.5% return. Dividend coming in at the middle of the month of $1.34. That is every single month hitting my account, and I'm excited to get that back up to where it was before I sold out of the stock. I had around 10 grand in the stock and I sold out of it. So I paid off my car and my credit card debt that I had left over. So I'm debt free now because of realty income, but I do want to build up that position back up to that $45 to $50 range every single month. And guys, this is going to be my Social Security stock, essentially. This is going to be the one that I put a decent amount of money in, make it a pretty big position, but I don't want it to be in my top 5 just because I think there are better growth opportunities in stocks like Visa, Google, and Apple. But this will definitely be a big chunk of the portfolio because I want that consistent monthly income. Next up, we got Altria down a bit today, about 5% at 56.16, but I'm still in the green. 320 shares, a little under 18K worth of market value. Average cost is 47.27, around 32% or 33% of the portfolio is in Altria. Today, we're down $840, 5% loss. Total, we're still up 2,800 with an 18% gain. Then, of course, at the end of the month, this is the biggest pair in the entire portfolio, sitting at $326.40, hitting the account on April 30th. And guys, the big thing is this pays for a share of Apple forever. So I'm excited about that. I will be adding another share of Apple come the end of the month. Next up, we got Coca-Cola sitting at $71.24. We have 15 shares, $1,000 worth of market value. Average cost is $60.54. Around 2% of the portfolio is in Coca-Cola. Today, we are down $9. Total, we're up $160 with a 17.67% return. So, guys, Coca-Cola is still rich here. I wouldn't purchase it at these levels, but I still want a piece of the company. It's been around for 100 years. I'm very brand loyal. Drink a Coca-Cola product pretty much every day. So this is one of those that I want to be in the top 5, which means I need to add a lot more capital to the position. Next up, we got Apple in the green at $224.94, up $1.74 today. I'm kind of surprised that it is not down today, but share count's at 12, so I did buy my share for this month. My goal is 20 by the end of the year, so Altria will be buying 3 of those, so I am responsible for about 5 or 6 of those shares. Around $2,700 of market value. Average cost is around $220 per share, so I am in the green a little bit, but it's still a buy for me at these levels. Around 5% of the portfolio is in Apple. Today, we are up $20, a 0.76% return. Total, we're up nearly $80 with a 3% return. And guys, this is one of those that I want to pour money into as long as it's near my buying range. I bought a single share a couple years ago, and I had to sit on it for a while. Honestly, this should have been one of the bigger positions since I started investing in 2018. I missed the ball. I dropped the ball. Should have bought Apple a long time ago. I should have owned Apple before the stock split, the 4-for-1 split even happened. It should have been one of my bigger 10,000 plus positions. So I'm building it every single month. month. Every buy, helps build the dividend snowball, and this is one of the highest, if not the highest quality company in the entire world. So Apple will be one of the, if not the biggest position in the portfolio, and I'll be very happy about that. Next up, we got AbbVie sitting at 204.43. Down a little bit today, but still not near where it needs to be for me to purchase any shares. We have a share count of $95, around 19K worth of market value. Average cost is $95.19. Around 36% of the portfolio is in AbbVie. Today we're down $175, down 1%. Total we're up 10 grand with a 114% return. So guys, this is one of those companies that I would love to add more to, but it is just so high above my average cost. And I know one of the big Achilles heels for investors is that they don't buy or continually buy stocks. They get too married to their average cost, but I don't think it's worth boosting it up that much, especially because the dividend yield I have locked in is very high, and I don't want that to go down as I buy more shares. So overall, I'm just going to use this dividend to buy or help buy Google every single month. So the goal of the portfolio is to use this month's dividends to buy next month's company. So Altria buys Apple, AbbVie buys Google, and then Visa helps buy a share of Coca-Cola or Altria, whichever one is at a better price. So as of right now, AbbVie pays about $155, so it's like $30 off of paying for a share of Google. So it is continuing this strategy, and I'm excited to add to Google as well as Apple this year. Next up, we got Visa up today about 0.5%, sitting at 348.10. We have 35 shares, a little over 12K worth of market value. Average cost is $347.67. 22% of the portfolio is in Visa. Today we're up $56.53, up about 0.5%. Total we're up $10, a measly 0.08%. So overall, guys, pretty much at my average cost here at Visa, so it would definitely be a buy for me. Then, of course, we've got Google, which is up pretty big today, almost 1% at $160.06. Still a huge markdown from where my average cost is at. 7 shares, $1,100 of market value. Average cost is $187.86. 2% of the portfolio is in Google. Today we're up $8. Total we're down almost 200 with a near 15% loss. So this by far is the best buying opportunity in the entire portfolio, and I'm hoping to take advantage with that AbbVie dividend next month if it stays at these levels. So as of right now, the goal is to just keep on buying more Apple stock, but try to take advantage of some of these other deals within the portfolio. And right now, definitely Apple is the best buy, or excuse me, definitely Google is the best opportunity. But my main goal is to buy Apple this year. Then Costco's sitting still below $1,000, up pretty big today. Up big for the month, is still down. So long term, you pretty much break even if you've held the stock for a year. You're up. But in the short term, anything can happen. So if you bought it, a month ago and it was at 1,068 or whatever the high was, around $1,050. If you now have the opportunity to buy it at $968, you're making money. But if you bought it at a lower price than that, you still might be if you bought it at like 700 or around the 700 price last year, you're still in the green. So price really does determine whether you're buying or selling, and it does have an emotional effect on the choices you make. But again, just like I said with AbbVie, don't get too attached to your buying price, because you could miss out on a great opportunity that you wouldn't know unless it was hindsight. So as of right now, I don't have the cash to buy Costco, but I do want to add a share eventually. It is one of my favorite businesses. It'll be number 6 behind Apple, Visa, Google, Coke, and Berkshire. But once I own Costco, I'm never selling it unless something changes economically with the business. I do love the management team and how they allocate capital, and that's what really sets them apart for me. I feel like Walmart is kind of sloppy. Target has had so much bad press, and their management team doesn't seem like they're really on the ball with the overall profitability of the company. They try to be woke. They got, slandered and bashed in the headlines. You don't see that happening at Costco. Costco has a great, shopping experience. They have a great membership program. They treat their customers very well, and they have very fair prices. The margins are low in the business, but they still make money overall. So, and I like the way that they run their warehouse operation. So, and they also are very, like I said, they're very good with capital allocation. When they don't have enough money or don't think it would be profitable to build more warehouses, they don't waste that money. They give it back to shareholders in the form of a special dividend and dividend payments in general. So overall, if every business was run like Costco, AT&T, VF Corp, anything that cut their dividend during COVID-19, they would be a lot more profitable, and we'd have a better overall, I think, a better overall economy if other businesses were ran as well as Costco is. And then, of course, we got Berkshire, which is up, which, again, like I said at the beginning of the week, I am not surprised. With tariffs going around, I feel like Berkshire is going to be going up simply because people understand that Buffett has a crap ton of cash, and this is where they're going to run when there's economic uncertainty. They're going to get out of individual stocks, and they're either going to put that money into the overall market, or they're going to be putting it into Berkshire Hathaway. So as of right now, I'm not surprised to see that Berkshire Hathaway is in the green, and I wouldn't be surprised to see it keep growing. But with that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel. That dividend guy, hit the like button. It does help the overall channel. And I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.